Gentlemen, hey, Mike Price, president of LTI Mortgage. And in today's video, what I want to talk about is how to finance a pool. I get calls all the time with people saying, hey, I want to put a pool in. What's going to be the best way for me to do that? Do I go to the pool company and pay their high interest rate? Do I go to the bank and try to get a home equity line of credit? How do I finance this pool? All right, so the best way to do that, from my experience, is basically just to do a what we call a cash out loan. It's a cash out refinance, a home equity loan. Now, a home equity loan and a home equity line of credit are two different things. Okay, with a home equity loan, as long as you've got the equity in that property, you can take that money out and buy whatever you want to. In this case, we're talking about a pool, but the home equity line of credit kind of works like a credit card. You know, you got that money there to do whatever you want to with, but I mean, it's not fixed. It fluctuates. They can cut it off. You kind of don't want to be stuck in that situation if you're trying to build a pool, be halfway through with it, and for some, I don't know, something happens and they shut your line of credit off, and now you got a big hole in your backyard. But with the home equity loan, the goal of it is you go in here, we're going to refinance your loan, and hopefully if your rate is high enough, we're going to lower the interest rate on the big loan as well. So whatever you've got remaining on your property, we're going to lower that rate, and we're going to give you cash. Now, you're going to get that cash based on whatever interest rates are on that particular loan, but it's, in most cases, in 95% of the cases, you're going to come out a lot cheaper than going out here getting this second loan with this second line of credit, if you can even qualify for the home equity line of credit. So what I'm going to do here is I'm going to go on screen and show you the differences in this scenario that I put together to kind of help you make a better decision. And if you have any questions, obviously let me know. There's going to be a link in the description. We look forward to helping you soon. Just 1 second. Let me get over to the next screen. Okay, so in this scenario that I've put together, all right, we've got Mr. New Pool in here, and his current house is sitting at about $500,000 in property value. All right, so he bought this house at $350,000. He's paid the balance down to $300,000. He's got quite a bit of equity in there, but his current rate, he's at 4.125%, so he's getting killed on the interest rate. With today's rates, obviously his payment would be a lot lower, but right now he's spending $1,696.27 each month on his actual mortgage payment. Now, that is before taxes and insurance. So what we're going to do now is I added $100,000 to it, and so he's getting a really nice pool. I'm talking salt water, heated, all that good stuff. But we went in here and we lowered the interest rate from 4.125 to 3%. Now, pay attention to this payment right here. The new payment, $1,686.42, compared to what he was paying, $1,696.27. I know, hey, big deal. The guy's saving $9.85. However, he is going to walk away with $96,000 in cash to build his pool the way that he wants to. All right. So we accomplished our goal. He got $100,000 for the pool, dropped the interest rate lower than what he's already paying over here on $300,000. Now we're paying 3% on $400,000. Payment's actually cheaper than what he's currently paying, and he walks away with his money. Okay. Now, also, here's a third option, which and this is the option that most people do. They want to get a pool. They call the pool company. Pool company says, hey, we'll do it. We'll give you the $100,000, 4.99%. And we'll put you on a 10-year term and let you pay that deal off. His mortgage payment and pool payment just went from $1,696 to $2,756. Now, basically what that is the pool loan that he's got to pay for. All right, so the pool loan is $1,060 a month. That's the principal and interest on that. Not to mention, he's still got this second mortgage. That's how you get to $2,756. Now, looking at this scenario, I want you guys to tell me this. Which one makes more sense to you? Do a refinance, get the cash out, drop your interest rate, and save yourself $1,000 a month, or go over here, take a second lien out and pay the pool company a lot more interest and just rob yourself of a lot of cash out of your account. But hey, if you're looking at this scenario, you're thinking about getting a pool loan, have any questions or anything like that, definitely give us a shout. My name is Mike Price, President, LTI Mortgage. I do this for a living, people. I know the numbers, they just make sense. When we put this scenario in front of you and we show it to you with your specific numbers, you're going to get a mortgage coach total cost analysis just like this, so we can show you the difference in how we can make your mortgage work for you and your benefit. But hey, give us a shout. There's going to be a link in the description. If you're interested in applying online, obviously there's a link for that as well. But we look forward to helping you out. But we wanted to get this information out there because we're getting a lot of calls about people wanting to do home equity line of credits to do a pool. And that's just not the best way to do it, especially if you have the equity to do it with the cash out loan. Hey, look forward to talking to you guys soon. Take care.